Very good morning, everyone. Very good morning. How are you? I hope you all are doing good. Sorry for the voice. Audio video all clear? All clear? All right. So, have you been following the earlier three parts of the FSR? Have you covered it? I hope you have understood whatever we have discussed, right? So, we are continuing the remaining portion in the series. So, today is part 4, and I think we have covered this thing, right? So correlated sell-offs, bandwagon effects, we have discussed this thing. Now we have to take up from here stress in the commercial real estate sector. Okay. FSR will be covered in how many parts? I don't know that. Okay. Even I don't know that. Let's see how much time it takes. We have to complete it thoroughly, understanding everything, right? So that you are able to capitalize upon it. That is the main concern. Okay. So let's continue from here. If you have any doubts from the previous classes, you can ask me. Otherwise, I'll resume. You have understood whatever we have discussed, right? All the technical terminologies. Yeah, I have a sore throat today. So, cold, cough, cold, everything. So, but still, थोड़ी सी आवाज में दिक्कत हो गया आप लोगों को आज. Heavy voice. But I think you will manage, right? All right. All right. So let's begin and continue the analysis. Okay. One more thing, as I told you, that whatever concepts are there, whatever concepts are coming in this report, just make a separate page or a register, write down all these concepts, whichever I am explaining you, so that at the end, when you need to revise it, you have the concepts written over one place and you have the facts. So it will be easier for you to revise them. Okay. So we are starting from this point, stress in the commercial real estate sector. Last thing which we have discussed was, stressed asset valuations, right? Now, when we talk about the real estate, commercial real estate we are talking about, right? Commercial real estate where you have these commercial properties being purchased and sold off, right? So why is there stress in the commercial real estate sector? So at the global level, the Financial Stability Report says that at the global level, the commercial real estate sector is facing stress. What are the reasons? What are the implications? We will be discussing. So you see, the commercial real estate prices have seen a sharp global decline, posing significant risks to financial stability. So the report highlights at the global level, this commercial real estate sector, all these properties related to commercial properties in the real estate, they have seen a sharp global decline. Why global decline? Can you please tell me? Anyone? Why you see in the previous years, in the recent years, why the commercial real estate sector has witnessed a fall in the prices? Any idea? Also, this is something which we are talking about at the global level, right? Also, if you remember, if you are following my classes continuously, I have been discussing with you, if you talk particularly in case of India, so at the national level, your commercial real estate or the real estate sector was badly hit by demonetization, GST, Corona as well. But we are talking at the global level. Yes, COVID, very good. So COVID and all these things, financial volatility, you see, tightening of the liquidity by major central banks. All these factors together, particularly COVID impact is there, very good. So that's why geopolitical tensions as well, right? So all these things, some economic sanctions, many factors contributing, they can have impact on real estate as well, right? So these are the reasons why they are witnessing a sharp global price decline. Now when there is a price decline, so you see the market will get affected, real estate market, right? According to the IMF, International Monetary Fund, the CRE prices in the commercial real estate, they fell by 12% in real terms over the 1 year. So last 1 year, if you see, they fell by 12%. This is a good, substantial amount to affect the market and to have its spillover effects in the related markets, isn't it? Right? And the sector remains vulnerable to high vacancy rates. Now remember this thing, high vacancy rates. High vacancy rates. What are these vacancy rates? So see, if prices are less, property prices are less, so vacancy rates would be higher, right? Yes or no? What are vacancy rates? So vacancy rates, you know, the difference between, so what you are leasing out for contracts, the properties which you are leasing out for businesses, for commercial purposes, still there's a surplus remaining, right? So there are vacancies in the vacant properties are there which are still to be leased out for business purposes or for commercial purposes. Are you getting my point? So this is high vacancy rate. Remember this point. In commercial real estate sector, it is there, right? Due to these fall in prices, because then when prices fall, you are not able to sell out your properties in the market, isn't it? Because you don't want to incur losses. So you are waiting for the prices to rise, isn't it? So this is the thing. And rising financing costs. So remember these two terminologies. Have you jotted them? You write all these concepts separately in a register as I have suggested you. It would be easier for you to revise them, right? So high vacancy rates, more space available than what you have been leasing for commercial purposes, isn't it? Then financing costs. The financing costs are very higher. Why? Because, you know, what are financing costs in the commercial real estate? Basically what you borrow. So you borrow funds from the banks to invest in these properties. These have been very higher. You see interest rates have been rising, isn't it? So we have seen a rise in the interest rate trend past few years, right? We have discussed several factors responsible for this. So it is increasing their cost of borrowing. So it is increasing the financing cost in the commercial real estate sector. Already you have lower prices, so your profits are eroding away, then you have higher financing cost, so again strain on your profits, again strain on your income out of commercial real estate sector. Yes or no? That's why the heading stress in the commercial real estate sector is there. Okay, the following are the key aspects and implications of this decline. So we have seen the phenomena, we have discussed the causes, now we will be discussing the consequences. What implications does it hold for all other sectors or related sectors, right? So what are the implications? Why are we concerned about this stress in the commercial real estate sector? So the first impact is on banking system. First impact is on banks. What impact on banks? So you see, CRE loans make up a substantial portion of the bank loans in many countries, not only in India. Whatever bank loans are there, their substantial amount is coming. The loans are going to CRE sector, commercial real estate sector, right? So smaller and medium sized banks particularly, they are exposed. Now why they are exposed? So you see, if there is lesser profitability in your business, what happens is your chances of defaulting on the loan increases, isn't it? Your chances of defaulting on the loan increases. So if you default, that causes a strain on the balance sheet, of the bank. Also, these are small and medium sized banks, so they must already been struggling with the capital, isn't it? Right? So this is a risk on these banks. Are you getting my point? So if the prices have been falling, financing costs have been increasing, they might default. So if they default, there will be a twin balance sheet problem. You remember we have discussed twin balance sheet problem. When a company defaults, an entity defaults, that balance sheet problem also gets reflected into a corrupted balance sheet of the bank who has lended to that company, right? So this has the spillover effects or the rippling effects, right? This is the thing. So we are saying that the smaller and the medium sized banks are particularly exposed, okay, while large and globally systematically important banks have minimal exposure. Remember this point as well. We are only concerned with the smaller and the medium sized banks, not about the global systematically important banks, because they are not at much risk. So remember this thing. Now there is this another concept which you should note down, right? Tell me, what are global systematically important banks? You know what are GSIBs? GSIBs. So global or SIBs. What are systematically important banks? What are sorry, what are systematically important banks? Anyone? Any idea? Anyone? What are systematically important banks? So systematically important banks are basically which pose systemic risk. No, systematically important banks are, large enough. They are too big to fail, right? They have a huge impact on your banking system. They have so much interconnectedness, complexity. They are the prominent, they have impact on your banking system, right? Prominent banks, they are too big to fail basically. Yes, Mana, right? Right, too big to fail. Now you have systematically important banks. These are your systematically important banks, so they have impact on your entire system basically, right? But what are global? So at the global level, these are, yeah, at the global level these are identified, so these are global. And then you have domestic systematically important banks as well. Remember one thing, note it down, you just note it down. So at the global level, who decides these global systematically important banks? At the global level, who decides these GSIBs? So at the global level, your financial stability board, stability board, along with your Basel committee on banking supervision, okay, plus the national authorities of these banks, national authorities of these banks. So these are the institutes which, in collaboration with each other, they decide who will be, what all banks will be there in the list as GSIB. Are you getting my point? Right? So these are the things. Now the question is, have you jotted down? लिख लिया सबने this thing, right? Now there's this important question, that is there any Indian bank in this list? Tell me, yes or no. Is there any Indian bank in this global systematically important bank list? Yes, no, no. Okay, so there is no Indian bank so far, no Indian bank so far, no Indian bank yes, in this list, right? So we need to improve still, right? No Indian bank. Remember this thing. Also, when we talk about the domestic systematically important banks, so at the domestic level, if you talk about India, you have three systematically important banks, right? What are these? Very good. SBI, ICICI, and then your HDFC. So at the domestic level, who decides, who categorizes them as DSIBs? The Reserve Bank of India, your RBI, right? So now you understand. So that's why we are saying, because they are too big to fail, they don't have that much risk due to commercial real estate sector stress, okay? But the smaller and the medium sized banks have, okay? Now moving back to the analysis. So this is the impact on the banks. What are the parameters? Parameters are their impact, their interconnectedness, their complexity, all these things, right? Now the another impact, if you discuss, is risk from non-banking financial institutions. Non-banking financial institutions. So Another impact, another risk which is there related to commercial real estate is from your non-banking financial institutions. Why? Because NBFI exposures to CRE is more. If you remember, uh, leave the global level. If we talk about the national level, if you remember, I told you, because real estate in India is heavily dependent of for loans related to infrastructure properties on the NBFCs, non-banking financial companies, right? So we have discussed that after GST and demonetization, if you see, real estate has witnessed a sharp decline. Also, it was that period when you see the balance sheet of NBFCs also getting corrupted. Yes or no? You remember these discussions we have had, right? So also at the global level, all these non-banking financial institutions which provide you financial services but they don't operate as a bank under banking license, all these institutions or companies, they have been offering loans to the real estate sector at the global level as well, right? So at the global level, they are exposed to these risks in the commercial real estate sector. They have significant exposure to CRE sector and they are closely linked to the banking system. Now, why this is a threat? Because they are closely linked to your financial system, your banking system. If they are at a risk, then your financial system is at a risk. Yes or no? Right? And that risk can exaggerate and go and take a form of systemic risk. It can collapse your entire system, isn't it? So this is the thing. This is another impact of this stress in the commercial real estate sector. Then you have these contagious effects. What are these effects? That the interconnectedness between NBFIs and the banks can lead to broader financial instability, because risk in the one may translate to corruption, or corruption means corrupting the balance sheet of the commercial banks as well, because NBFCs are also as they are also working as borrowers. They are also there as borrowers from the banks, from your institutional commercial banks. So if their balance sheet gets corrupted, their ability to pay back your loan gets affected, then your banking system, in your banking system you have these twin balance sheet problems again. So these are your contagious effects, right? They spread. They are not limited to a particular entity. Have you understood that? Right? So that's why it is a risk. Losses in the CRE sector can propagate through these linkages, your non-banking financial companies, and then it can spread to your entire banking system. Is this clear to everyone? Is this clear to everyone? Yes? Okay. Alright. Now moving ahead to the next section. So we have discussed the whatever the report says regarding commercial real estate. Now there is this another heading, geopolitical risks. Geopolitical risks. So basically, at the global level, you have geopolitical risks as well. Why? Because there are these geopolitical tensions going on. So when you have geopolitical tensions, there are these sanctions which are imposed, right? Economic sanctions or financial sanctions, that the trade gets affected. So at the global level, you have these risks as well, which are threatening the growth of all your countries, right? So let's see. So basically the report says potential threats to financial stability stem from volatility imparted to capital flows, asset prices, dampening of investor sentiment, unsettled financial markets, strain on the balance sheet of financial institutes through deterioration in asset quality and profitability. What is the report saying? Due to geopolitical tensions, all your financial market related entities, they can face balance sheet problems. Why balance sheet problems? Because due to these tensions, due to these risks, your asset quality gets affected. Can you name the asset quality index which we have seen? What are the indicators which reflect your asset quality? We have seen in the earlier part of this report as well as the RBI annual report. Anyone? So return on assets, return on equity, you remember that, right? all these soundness indicators. So at the global level, they get affected, and then it affects your asset quality and profitability, right? Now, there is this important thing, another index. You should remember this, geopolitical risk index. You might be wondering, there is some index to which gives you the value of the geopolitical risk as well. Yes. So there are two individual researchers, they have developed this index, geopolitical risk index. It is constructed, how is it constructed? By counting the number of newspaper articles related to adverse geopolitical events, whatever news articles are there related to adverse geopolitical events, as a share, how much share do they hold, out of total number of newspapers articles at a monthly frequency. Whatever newspaper articles are there during a month, out of them, how many of them are related to geopolitical risk or tensions. It gives you what is the geopolitical risk level going on at the global level. So if it is higher, that is higher, reflective of higher geopolitical risks, isn't it? Understood? So this is, this has increased. Why we are concerned for this? This has spiked alongside. Why this has spiked? Because geopolitical tensions are going on here and there. So when geopolitical tensions are going on, it increases the trade restrictions. It increases the trade restrictions as well as financial sanctions, reversing the gains from several decades of global economic integration. So whenever you have geopolitical tensions increasing at the global level, it affects your trade. Trade gets affected. Supply side inflation you have, isn't it? So then supply gets affected. So countries witness this bottleneck inflation, right? Also you have economic sanctions. If you have been witnessing the news, reading the news for last few years, you see continuously countries like Canada, like US, like EU, like UK, all these are imposing economic sanctions or financial sanctions on the Russia, right? For Russia-Ukraine war, due to Russia-Ukraine war. So then you restrict some of the commodities to be imported in your country. You restrict trade with these countries. It affects the global economy. Everyone is interconnected, right? All these things are happening. So it wipes away whatever profits, whatever income you have generated due to global trade volume in past few years. So it is a cost which you have to pay, which entire world has to pay for indulging in all these kind of activities, non-humane activities. Getting my point? Okay. Then episodes of geopolitical tensions have generally been associated with, so whenever you see there are geopolitical tensions going on, you have a spike in the crude oil prices, right? Russia, one of the exporters of the crude oil and natural gas, because Russia has this permafrost region called as Siberia. You remember that? Siberia, right? So a very huge part of Russia gets covered under this permafrost region of Siberia. Why this permafrost region and the ocean bottom is important, is economically important for everyone, also ecologically. Why? Can you tell me what is the reason? Anyone? So permafrost regions, also the ocean beds, these are the places where you have these methane, shale gas, they are trapped, so these can be extracted from these regions. They are abundant in these type of gases. And when we are all moving ahead with the aim of renewable energy sources, so these are the best alternatives which we have: shale gas, natural gas, right, methane. So they have these gas hydrates, under which these gases are trapped in the permafrost region, which is permanently frozen, and the oceanic beds. That's why you see Russia has this advantage. But due to geopolitical tensions, the supply gets affected, and when supply gets affected, you have these spike in the prices. So it comes as a supply side inflation. Understood? So remember these things. Then disruptions in the supply conditions which could interact with other channels and amplify stress on the real economy and the financial system. And when you have inflation, you have limited supply, it gets resulted into rising price levels. Then you have costlier inputs. You see, crude oil, all these things are used as inputs in many industries. So then your cost of production increases, then your final product becomes costlier, you become lesser competitive in the market. All these chain reactions, which I am confident enough that you all know by now, right? How to establish these chain reactions. So it has a spillover effect. It is not limited to a particular commodity or particular sector. Have you understood that? So this is the thing. This was all about the geopolitical tensions. Remember this geopolitical risk index. Now moving ahead, risk stemming from the private credit. Risk stemming from the private. Just give me a second, okay? What are the risks which are there coming from the private credit at the global level? So this is another heading. The Financial Stability Report says, okay, first of all, what is private credit? Anyone? You know the difference between private credit and the traditional credit which we have? What is private credit? Anyone? Private credit. Yes, very good. Non-bank lending, basically, also known as direct lending. So private credit is something sorry, emerging at a very great level worldwide, be it India, be it any other country, right? So private credits are emerging everywhere across the globe. You have all these non-banking entities, private equity firms, insurance funds, pension funds, mutual funds, all these entities providing you private credit. So it is the credit which is offered by your bank. So apart from what is being offered by the traditional banking channels, this is your, apart from that, the rest is your private credit, right? Why at the global level private credit is gaining so much popularity? The question is this: because you know, these are providing you faster delivery, faster disbursal of the funds. They are providing you better customization offers, right? They are providing you all these diversified product line. Also, when you are already a leveraged borrower, you have been borrowing for so long, you don't have a good credit score, you already have outstanding loan, huge amounts of outstanding loan. In that case, getting loan from the traditional banking channels become difficult because these are heavily regulated by the RBI. So what alternative you have is the private credit. That's why you see at the global level these are gaining prominence. Now what are the risks associated with it? So the report says that the rapid growth of private credit, increasing interconnectedness with the banks and NBFIs, and opacity can create vulnerabilities that could become systemic. So this is a bigger problem. They are saying that these private credit related risk, now because it is, you know, heavily getting interconnected with the banking system and the non-banking financial institution as well, right? If they exaggerate, these problems can become systemic. This can collapse entire system, right? So let's see what are the risks which are expected out of this sector, right? So the key dimensions through which these risks could be propagated, what are these channels via which these risks can be spread to other sectors. So first thing the report says, riskier borrowers. Why do we have more riskier borrowers here? Because they are heavily leveraged, right? They are already having huge amounts of outstanding loans, right? Already having huge amounts of outstanding loans than their counterparts, the traditional banking channels borrowers, right? In traditional lending spaces, who could generate outsized losses. So if you have risky loans, because you know they are not very heavily regulated, private sector entities, private credit entities, So they extend extensively, loan extension is done aggressively. Chances of losses are higher in that case as compared to the traditional banking channels. So this is the first thing. Have you understood that, right? Next point, next risk which can stem out of here is investors, particularly, you know, all these insurance companies, pension funds, who could experience large capital losses with systemic implications. So these are also involved in this entire process. Now these can also be affected due to these systemic implications. What are these? So if there any loss, any huge loss, these investors also get affected, right? Sometimes they are also providing you these facilities, right? So having risk on these type of companies, insurance companies, entities, pension funds, can actually create systemic risk, right? And then it can have rippling effect of over all other related institutions. So this is the thing. Next thing which you have, private credit structures are becoming complex, adding multiple layers of leverage. This is something you should remember. These private credit agencies, they have a layers of, you know, investors, then borrowers, fund managers, all these people. They all are, there is higher multiple layer of leverage. So all these, you know, continuously again and again multiple times they are engaging in the borrowing and lending activities. Also the leveraged borrowers are there. As I told you, you are already overburdened, you already have huge amounts of outstanding loan, that's why you are not able to get loan from the traditional banking channels. So the alternative comes, or the alternative which comes as the savior to you, is the private credit. But then it becomes complex and it becomes riskier as well, right? So this is another risk. Then you have liquidity risks. Why liquidity risks you have in the private credit? Because it is amplified by retail presence. These are generally retail direct consumer lending, isn't it? So when you have direct consumer lending, the liquidity gets affected. You have higher retail presence, okay? And then higher redemption rights. What are redemption rights? What are redemption rights, you know? So redemption rights basically gives the shareholder or the investor the right to claim the return on the investment during a specified period. So generally these redemption rights, to redeem their shares or say any investment, right, generally these are utilized whenever a shareholder or investor wants to exit that investment into that fund before the specified period of time. Why higher redemption rights being offered are a threat in private credit? Because if everyone starts exercising their redemption rights, you have understood what is redemption right, everyone? Yes or no? Have you understood what are redemption rights? Yes. So why are they a problem? Because if everyone exercises their redemption rights, the liquidity of that company gets affected, right? You have to pay back all these funds, isn't it? Also then the confidence gets affected, investor confidence. So your capital, yes. NCRT for this examination I don't think is much needed, okay? For basics, you just follow these things I have been explaining. We have been discussed, we have discussed, and these concepts, you know, much in a much depth and much diversity of concepts in our classes, okay? So liquidity risks are being amplified by these retail presence, more individual lending, consumer oriented or direct lending is being there, creating higher risk, as well as redemption rights. So I was discussing, if there are these higher redemption rights being exercised, everyone wants to exercise their redemption right, affects the liquidity of the company, isn't it? So this is another risk. Then you have interconnectedness with other segments of financial system. So this is not something operating in isolation. This is interconnected with all other institutions as well. So when you have so much of interconnection, it translates into systemic risk. It can affect the entire system. So this was what the report says regarding your private credit. Have you understood that? Any doubts from this section? Private credit? Remember all these risks? You can highlight them into your answers. Any questions? Clear? All right. Okay. Now, so next section is cyber risk. Next section is cyber risk. Okay. Now, at the global level, there are increasing cyber risks as well. You see, global level, national level, cyber risks are increasing. So what does it say? It says that, you know, with increasing digitalization of financial services, recurring intensity of cyber attacks has dominated the financial stability concerns. Lending via MF will have impact on companies, mutual funds. Yes, of course, they all are interconnected, right? So with, you know, digitalization of all these financial services, much of technology being utilized in delivering of the financial services, the risk which comes is cyber attack. You have cyber attacks in every segment nowadays, right? So what are these? What are the threats are highlighted by the report? Let's see. Types. So if you see the types, the disruptions range from security bypasses to information disclosures to denial of services. So types of cyber effects in your financial sector are increasing. New types of cyber attacks are being witnessed. What all are these types? You can write them down. I'm explaining them to you. What are they? So just write them down. So first type which is mentioned here is security bypass. Security bypass. What is bypass? When you bypass something, you try to override it, isn't it? You try to avoid something. So security bypass are, you know, these kind of attacks which are able, they are capable of trespassing or bypassing or avoiding these security measures like antiviruses which are installed in your devices, right? Antiviruses, firewalls, all these things. So you are able to bypass them and then attack and then infect or do your malware, right? So this is the thing. Then information disclosures, note it down, security bypass. Second type of cyber attacks which is gaining prominence in the financial sector at the global level is information disclosure. Information disclosure, when you intentionally or unintentionally there is some website which discloses confidential or sensitive information or becomes vulnerable to that due to any attack, or if it discloses it, then you can have a cyber attack as well. So the information disclosures can be intended or unintentional as well, right? So this is another type. Then you have denial of services. In some type of cyber attacks, the legitimate users who should have access to certain networks, services, devices, these attacks, they deny the access to all those networks. So all these types of cyber attacks, they badly hurt the financial system at the global level. Have you understood all these three types of cyber attacks? Yes, everyone? Anyone? Any doubt? Noted down? Huh? You have all these things, but still we are trying to understand the types basically. So understand it like that, okay? Bypassing all these softwares and firewalls and all these things. So I hope you have understood all these types. Now, frequency if you talk about, so the report says number of publicly reported cyber attacks have been rising globally at an alarming pace. This is something very alarming, right? With the share of the attacks in the financial domain increasing at a rapid speed. Frequency is also increasing. Frequently, you are witnessing these cyber attacks in financial sector, right? So this is the risk at the global level. All the financial entities, system, banking system, they are vulnerable to all these types of and various types of cyber attacks. This is what the report highlights. But why are we concerned about it? So if you see there are higher cyber attacks, people tend to lose their confidence in the financial system. They will try, if there are frequent cyber attacks, they will try pulling out their money to make it, to place it at a safer place, whatever they think so, isn't it? So that might lead to capital inadequacy in the system, all these implications. So what are the implications of these cyber attacks in the financial system globally? Let's see. Implications. So impact on the financial system. What will be the impact on the financial system? Ransomware crypto payments, they are rising. One of such impacts is rise in the ransomware crypto payments. So you see crypto trading in cryptocurrencies, when your file, these attackers, they lock your file, and then if you want to access that file, they demand a ransom payment, right? They demand certain payment out of you. Now because it is of importance to you, you pay them to unlock that file. So these kind of ransomware payments are increasing due to these attacks in the cryptocurrencies as well. Have you understood that? Right? Then business email compromises are happening. So these are the impacts. So it affects your financial system, isn't it? Then you have email compromises. You see, they are reaching out to your emails, they are manipulating you via your emails. You open a certain link and then you disclose sensitive information, isn't it? It poses a threat to the funds held under the financial system, right? Next thing, and cost of data breaches surged to a new high during 2023. So cost, related to your data breaches is also increasing. What is the cost related to your data breaches? Whenever these data breaches are there, so the affected parties, they get involved in litigation and all. So litigation, and then investigating the entire thing, trying resolving out, right? Providing compensation or providing anything to overcome or recover that loss. It costs you something, right? It takes time as well, it requires funds as well. So this cost is also increasing. That's how it also increases the strain on your financial system, yes or no, right? So litigation, investigation, resolution, all these processes are also then expensive as well as time taking. Understood? So these are some of the implications being witnessed. Then the financial sector, the report says that the financial sector has reported over 20,000 cyber intrusions and digital attacks. Over 20,000 cyber intrusions and digital attacks, which resulted in losses amounting to 20 billion US dollar over the last 20 years. So you see this much loss the financial systems globally are facing. Also, so this is the thing, around 20,000 cyber attacks and digital attacks, losses around 20 billion US dollars over the last 20 years. Now, if you see this graph, so you see 2000, these here on this axis you have number of incidents, then on this axis you have the timeline, right? So 2014, 15, 16, 17, 18 up to 23, you see rise, particularly after 2021. So 2021 से 23 के बीच में you see sharp rise, right? Rise in the number of such incidents is there. Rise in the number of such incidents is there. Understood? So this is the thing. Now, what happens is, another impact if we try to assess is, cyber attacks become more frequent and disruptive during periods of political and economic turmoil. So also these are getting exaggerated due to geopolitical tensions. So whenever you have turmoil, the attackers, they try, because then you have problem with your what do we call it, maintenance of law and order, right? Or you are indulged in certain kind of geopolitical tensions, war, external aggression. In that case, they try to take benefit out of this situation, because all your funds, energy, media are diverted towards something else. Then they try to capitalize upon this opportunity, and then these kind of attacks, they increase, right? So this is the thing. Then there is something, there is this impact called as cyber run. Remember this term, cyber run. So we have seen bank run, right? You know what is the bank run? So bank run is a situation when everyone, say there is a bank or a particular branch, every account holder in that branch rushes at the same time to the bank or to the branch to withdraw their money due to any rumor, any crisis, anything. So in that case, the bank collapses. Similarly, due to any cyber threat, if these threats are not curtailed, they have been, they keep on rising, that creates a threat. So as I have discussed with you, that reduces the confidence of the people, investor confidence, public confidence into the system. And when you lose upon their confidence, the investors will be selling off their assets, their securities, stocks, assets, whatever they have. So there will be sell-offs happening. And when there are these sell-offs due to any cyber attack, that is known as cyber run. So continuous or simultaneous sell-offs, this might be, correlated sell-off like situation. So continuously or simultaneously, all these markets may have been witnessing these sell-offs. So when you sell them off, again the financial market collapses. So due to cyber attack, these kind of sell-offs, they happen in the market, and that's why we call it a cyber run. Then we call it a cyber run. So cyber run are extreme cases. So when these cyber attacks or extreme cases, they can trigger cyber runs, affecting payment systems and bank deposits, especially impacting the smaller banks. Especially it impacts the smaller banks because they have lesser provisioning, they have lesser capital adequacy, they have lesser liquidity, and then they become more prone to these kind of attacks. So a cyber attack, what is a cyber run? As I told you, cyber run is when a cyber attack of sufficient size, it causes a cyber run. It is an incident which would cause market sell-offs or a rush of customers withdrawing their money. So this is the impact, cyber run. Have you understood that, everyone? Cyber run, right? This is the thing. Okay. Next we have, next impact of all these cyber digital attacks or cyber attacks which we have is fintech and open banking. Fintech and open banking. What are these? So first of all, you see, what is fintech? So continuously technology is being utilized in providing financial services, right? Your fintech services. Now in that case, there is this term called open banking. What is open banking? Write it down. So open banking is basically, it uses certain programming codes which we call as the automated programming interfaces, APIs. So they use these programming codes. So in open banking, basically, now you see open banking as the name suggests. Sorry. Basically, so customer or a consumer can share the financial information to third parties. What are these third parties? You can have these account data aggregators, right? Then you have app developers or other websites, whatever third party there are, entities there are. Okay, so these are your open banking, what we call as open banking. Now this is not something which is shared without your permission. You should remember that the permission is there, the customer permission is there. So is it beneficial for the customer? Yes, you can diversify your sources of financial services via sharing your information. You can be provided with what you are searching for in your financial portfolio, but it causes a risk when, although this is based on the customer permission only, no information is shared on which the customer has not given his or her permission, right? But still they then become prone to these type of attacks, cyber attacks or digital attacks. Have you understood that, right? So using fintech, so using technology in finance is good, but then these, okay, so you have these you tell me, first you tell me what are account aggregators. Account aggregators, we have discussed them. Then you will be able to understand payment aggregators also, right? You remember I have told you what are these aggregators. So these are, they get license and then they provide you the services. Also they are indulged in creating a repository of information, which you can access. So one time solution for information and all, right, related to your payments, related to your financial services. Okay, yes, all right. All right. So now we are discussing, so use of technology in financial market, that is good, but then when you use technology so much, it also becomes prone to these kind of attacks. So fintech and open banking, automated programming interfaces, as I have discussed with you, what are these APIs? These are, programming codes, particularly these type of codes, these are used for data dissemination between the customer, from the customer to say third parties, right? Disclosure of these informations, but that is something which has been permitted by the customer, remember. So these are used, they have enabled fintech and open banking. So open banking is possible due to this only. So open banking APIs are there especially for this thing. Then offering new revenue streams and improved customer experiences, that is good. So customer then have more options, their information, they don't have to share it every time separately with every entity, right? It is beneficial for the consumer as well, but then it comes with a cost, that it is also vulnerable to these cyber attacks. Have you got it? Now what are the drawbacks? Since APIs are becoming more attractive targets for cyber attacks, because these are the places where you have these financial information being disclosed. So they are one of the favorite places of the attackers, isn't it? They can get access to all these information. So this is another risk which is there highlighted by the report. Have you got that? Any questions so far? Also, then what is the systemic impact of these cyber attacks? So once any of the attack is there, it can, paralyze the entire system. So funds can be released unethically, then they can hack your websites, they can get access to your accounts, they can get access to confidential information, sensitive information to the of the customers, of the entities. All these range of implications can be there, right? So systemic impact is there. Cyber incidents can cripple financial infrastructure. The systemic, it can actually collapse, lead to collapse of entire financial system, leading to widespread disruptions. So why are we saying that? It is not something coming out of nowhere. We have had examples at the international level for this. So the history says it. What are these examples? So if you see, there have been historical examples given by the report. So one of them is this target 2 system. Okay, so there was this software error cyber attack in the EU, European Union, in 2020, recently, is not much earlier, right? So a software error in 2020 caused 11-hour outage of the European Central Bank Target 2 system. What is this Target 2 system? So Target 2 system is basically the system which provides for the interbank transactions in the European Union, right? Real-time settlement system it is. Understood? So it is their real-time settlement system. Now it was hacked for almost 11 hours. Now you see how much loss it would have incurred on this on their financial system, right? Then completely halting all the payments. So these type of incidents are there. Then another incident you have from Lesotho. Lesotho, it is a small Lesotho is a South African country. So cyber attack in December 2023, more recent one. So these are recent incidents, not very earlier. In 2023, there's this cyber attack which disrupted Lesotho's national payment system. So their national payment system was also attacked. It was hacked, preventing interbank transactions. So IMF source says that this country Lesotho has also witnessed these kind of attacks recently in December only 2023, right? So all these things are there. These are the challenges regarding cyber attacks. We have seen all the types which are highlighted by the report. We have seen the facts, we have seen the implications and the recent examples of them, right? So this section also has been covered. Next comes, so we have covered the global level, right? We have seen all these things at the global level which they are happening: cyber attacks, stressed value asset valuation, and then you have commercial real estate, all these things. But then now what we will be discussing is the domestic level indicators. What does the report has to say regarding your domestic performances, right? I'll resume from here in the next classes. It is already much time, so you revise all these things. I hope you are noting them down in separate register as I have told you, right? All right. So any doubts which you have from today's class? Any doubts? We will be resuming from domestic macro financial risks or indicators. We have seen the global macro financial indicators and risks highlighted by the report. All clear? All right then. All right. So I'll see you in the next session. From here we will be discussing the rest of the analysis. And thank you so much for staying interactive and staying active for so long, and keep on revising. Okay, one query about class timing, will it be conducted? No, there's this problem because of now, we have started the offline batches as well, so we have a lot of classes in one day. That's why it is becoming difficult to come to a permanent timing, although we are trying to decide the timings for all the classes, but I'm not sure whether it will be at 12 only. So whenever it happens, you will be notified, right? Okay, I'm not sure about it because it is difficult. We don't have free slots available, so that's why we have to manage the timing. Okay, any further doubts? All right then, I'll see you in the next class. Have a good day. Thank you so much. All right, thank you for your concern. I'll take care. Thank you so much.